Excellent way to end the week on the S&P 500. We had an awesome week. And in this video, I want to talk about 3 trades that I took. One was a losing trade and 2 were winners. I want to break them down on what I saw, where I entered, where my stop loss was, and the overall analysis backing the S&P 500. On all my trades and all my charts, I chart the /ES E-mini future. And you could trade any S&P 500 related instrument off of this. You could trade SPY options, SPX options. You could even trade the E-mini future contracts. Before we get into it, I recommend everybody to follow me on my Instagram at InvestaTrade. I'll post a link in the description below. You're missing out if you're not following it. I post some plans, I post some levels, and just really good trading recaps and resources that I guarantee you're not going to find anywhere else. The link will be in the description below, but now let's get right into these trades. First thing that we have to go over is the pre-market plan from Thursday, January 19th, just to understand levels and context. So scenario number 1 was we wanted to see a pullback into 3911 and 3898 demand to hold. If we can do this, we wanted to scalp the market long and play it to the upside, targeting 3937 supply. This was a very key level. Now, I saw a lot of people yesterday taking the market short. Yes, we were putting lower lows in. Yes, we were putting lower highs in. But just because the market's moving lower and selling off to the downside does not make it acceptable for you to take the market short. You have to remain objective at all times because this was a very good area to take the market long. As we got our bounce off of this level, somewhat of an inverse head and shoulders pattern, rallying up right into our 3937 supply zone. Again, these levels are there before the market trades at them. So right here is the Thursday's action. It was a very tight consolidation balanced day after the sell-off on Wednesday, and I actually made a trade recap video from the trades that day. Now, today on the 20th, which was Friday, our pre-market plan was pretty straightforward. We had this 3937 supply zone that sold price off yesterday. And we also had this 3911 demand, which bounced price yesterday. And it also bounced price perfectly overnight. So essentially the market is selling off. And now we're consolidating, forming a balanced range at the lows. We're building volume and consolidating with supply above and demand below. So the pre-market plan today called for sellers at the 393750 supply zone, that if we could break yesterday's high, fail at supply, I want to play short targeting demand. Now scenario number 2 was I only want to play long if we can get above 3937. If new demand could get created here, keep that in mind because that's going to be very key. Strong market leading equities or strong buying volume on the tape, then I want to scalp long into 3965 top supply. And I said this is a very, very bullish plan. And even if we break the previous day's low, I cannot be short yet. I want to look for buyers here at 3989 demand and 3911 demand, which is the green box at the low. So before the market opens, we hit this demand zone perfectly. Nice volume. I mean, we hit it to the exact tick and got a strong rally out of that. So it's safe to say buyers are definitely factored in between the previous day and the current day's action, that they're factored in at the lows. In fact, the first 5 minutes of the market open, we got a sell-off right into our 3911 demand zone, and we started to move higher. Now, with this context, the market essentially looked like this. We were still inside of this range where I said expect another test of one of the extremes before we eventually break out to the upside. The market's bouncing off demand and we're finding buyers. Then I posted an update in the intraday commentary tab. This is where I update my thoughts throughout the day of things that I'm seeing happen in real time that I cannot plan for prior to them occurring. This is something that I'm just reacting to and posting my thoughts and updates. Now at 9:57, I said I'm spotting some potential buying here at 3924, which is when the market looked like this right here. And essentially what I saw was the market bounced off the lows, right? We got that rally up, and now we start moving higher and we see some bids step into the market. Usually when we see a dip down and the market starts to see at offer trades move up and bids step in to support that, then that means there's a real true buyer looking to get into the market, speculating that we are going to rally even higher. So we have a buyer factored in here around 3921. Then we see bids step in randomly, and then they pull themselves before the trades could even hit the bid aggressively, and then the market sells back down lower. And then directly after that, we see an order of about over 4,000 lots at 3925. Now the green bubble is going to represent at offer trades, aka market aggressive buy orders. And 4,000 lots on the E-mini, 4,800 to be specific, is very, very aggressive size. And what really interested me here was not only was the aggressive size at the offer removing liquidity from the market, we also had someone adding liquidity to the market and putting a bid as we saw the aggressive prints come through. Now with this is a little suspicious activity. We obviously know that somebody's looking to maybe enter a very large position. Maybe someone's looking to even close out the market here. But the reaction after this unordinary little action on the tape is something that should not go unnoticed. And you need to see what the market does and how it reacts to it after the fact. Now, you could always spot this data using a normal time and sales, level 2, or any other order flow tool. I'm only showing it to you on Bookmap as this is a historical data place. So essentially what made me take this trade, I said I got long at 3925, stop loss below 3920, and I was targeting 3937 supply, and higher I was using supply as a target above as we spotted this buyers on the tape. Now really what made me enter this trade at 956 was this dip down right here. Not only did it align with VWAP, but it also got bought up where we saw these bids pull their orders as the market moved up directly after those large 4,800 lot aggressive at the offer trade, along with the bids that we saw earlier and the weird activity over here before that rally up. So this around 3924, 3925 to about 3920 was an area that if this could hold, then I would expect the activity that we saw in the past indicated that there might have been a buyer in the market looking to leverage into a large position, speculating that we were going to move higher. So with this in mind and this pullback, 956, 957, I saw this pullback hold and I saw us start to move up. And this is where I gained the confidence to enter the market in long, right when it looked like this. Now, the problem with my entry here at the yellow oval at the top was I have a philosophy and I have these rules that I stick to that I only sell if my target hits or my stop loss triggers. And the only way I deviate away from that is if a red flag presents itself in the market. Now, what I saw here was the market go test the opening price of the day and put in almost like a little double top on a 1 minute chart and began to sell back off lower. And then I exited this trade for a 2-point loss right over here. Then at 10 o'clock, I said I'm out for a 2-point loss. I keep my losses very, very small. And looking back on this, it wasn't bad, but it was not good. I'm happy I re-entered the setup. But I had no reason to exit out of this trade because this little pullback down here into VWAP, we bounced directly where I highlighted earlier. I'm going to fast forward this. Sell off lower, immediately gets bought up, and on this dip down is where I exited for a 2-point loss. I should have still been in this trade and I should not have exited because my stop loss never triggered. So that was my first trade. It was a long at the green oval, a stop out at the red oval. I had absolutely no reason to stop out. However, 3 minutes later, I've re-entered at 3926 using the same exact analysis. Exactly where I stopped out, I waited for the market to move higher. And as we moved higher and found buyers come into the market, this is where I entered. And as soon as you spot something like this, and keep in mind, I'm not solely focused on this. I'm also watching the charts and other order flow tools. Like I keep mentioning, I could only show you what the data looked like on this replay feature in Bookmap. But we got that bounce, and that's where I was comfortable taking the market long. So I've re-entered here at 3926 when the market looked like this using the same exact analysis. My stop loss, same exact thing at the yellow oval. This little sell-off here where I stopped out gave it validation that there's a true buyer in the market, and I was very confident that we were going to get that quick little 10, 12-point rally up into supply. And guess what happened? 5 minutes after, we got that strong push into 3937, and I got out 75% of my position here. From my plan earlier, I was targeting 3937 supply. I never deviate away from my plan. So the original trade was a 2-point loss, and then the winning trade was an 11-point win. I sold 75% of my position there, and I kept 25% open in case we wanted to see more continuation to the upside. I saw new demand forming here at the 3937 supply zone. Now, if you remember from the pre-market plan, scenario number 2 was if we can formulate new demand here and accept price above 3937, then I want to scalp the market long into 3936 supply. So now we're zooming out a little bit. We're testing the upper portion of the range. Then at 10:39, I'm out the last 25% of my position when the market looked just like this. I did not like that high at daybreak and not so much immediate more buying pressure to the upside. Essentially, we broke the high and started moving lower and failed. And this also coincided with a break of the previous day high over here. And it wasn't met with continuous buying. So I was very fearful that if we broke the high, it attracted a bunch of longs, and we could very well sell off from this 3937 supply zone, as it was responsible from a sell-off yesterday. So now I'm out all my position here. It was a quick 12, 13-point scalp from an original entry, spotting buyers on the tape, using real-time analysis with no hindsight. Then at 12:55, I said squeeze the shorts. With this consolidation that we saw over the lunch period, essentially the market moved up and we consolidated. When you see consolidation, especially at higher prices, near the high or near an existing demand zone, this indicates that buyers are accepting higher prices and the chances of upside are very high as long as buying pressure continues or late longs or early shorts get stopped out. So I said I would be interested in a pullback into 3937 again to hold. If we can pull back here, bounce off the level with strong bids supporting the move, I want to play long, targeting 3965 supply. And again, going back to the pre-market plan, because every time I post these videos, everybody's like, you made your levels after the fact, when in reality, these were all levels we've been watching for the past 2 days and reacting in real time to what we see with the flows of the market. The scenario in the plan was if we could form new demand here, strong market leading equities. Tesla was up 5% today. Apple was up 2% today. And we see strong buying on ES SPY, which we saw that on the tape with that example I showed you. We crossed off 3 boxes right there. Then I said I want to scalp long, targeting 3965. Well, guess what happens? The market had a sudden dip down right into 3940, 3937. And if we look at the tape at this point, what we're going to see is we're going to see a stop loss hunt, meaning the market sells off. The people that got in long over here at the high when we consolidated got stop loss hunted, meaning they exited their long position when we dropped down right here. And I'm also very sure that this also attracted new shorts to come into the market. So it was kind of basically screwing a lot of people, building liquidity. Maybe it was the same buyer that was buying earlier. Who knows? But essentially when the market dipped down like that and took all that liquidity, what we're going to see is bids just stepped in, and then you're going to see aggressive prints just keep coming through. When you see that, and when I see that, enter the trade. Do not hesitate. React to the flows of the market. We're spotting buyers come into the market. Do we know we're going to bounce? Absolutely not. But if we see something that we like, indicating that the market has a high odd of moving in our direction, just put risk on the table. As long as the risk makes sense, take the trade and let any other outcome the market presents you. Understand that it's out of your control and you have to let go of all other emotions instilling fear in your mind. So when I see this, enter the market, stop loss below the low, target 3965 supply. And this was the biggest winner today. It was a stress-free trade, just a straight move up right into our 3965 supply target. Yeah, I could have got another 20 points off of this, but what was stopping the market from hitting supply and selling off, and me not even making this video talking about a winning trade, and it would have been a losing trade if I got too greedy and didn't sell when I had my plan figured out. So essentially, shorts got squeezed, and I was watching the market to rally into 4,000 by end of day. We got very, very close, 10 points away, but it's just going with the flows of the market, spotting buyers, using supply and demand zones as context, seeing new demand form on the way up, using the level 2, time and sales, to spot these flows of the market and not going against the trend. Every single dip intraday got bought up. We're putting in higher highs, putting in higher lows. Sell-offs to the downside were getting bought up. Strong bids supporting that. And the market was just like a freight train moving up. If you step in front of it, you're going to get ran over. And context is very important. So I'm going to end the video there. If you enjoyed it, it was a quick little impromptu recap. Hit the like button. Comment if you have any questions. And every time I post these videos, I get questions. How do we join the Discord? The Discord is free, but it is only included and available for Invest to Trade course members. Majority of the education is in the course. The link will be in the description below. But I'm ending it. Peace out.